Good afternoon and welcome to GrainTV. It's February 1st, 2013. I'm Logan Burgess. To my right here is Brock Shimano. Well, Brock, let's jump into fire tip here. We had a mixed trade in the grains today. We see corn backing off 4 3/4 on the day. Soybeans were up 7.5, and wheat ended the day down 13.5 cents here. Brock, if you guys want to take a look at this trading platform for yourself, visit us over at grainhedge.com and you can take a no obligation demo over there. But Brock, in general, what was kind of your take on the action today? I know we had some fundamentals come out. Can you kind of break it down for us?
You know, I think we were pretty sharp to the upside in the overnight session last night. It was kind of surprising that we did sell off a little bit. We did go up and meet some highs that we haven't seen for a while, in corn in particular, and soybeans we also backed off a little bit too. Yeah. Actually ending the day negative on corn and wheat. But I think what we saw come out midday today was the Informa numbers for South America. If we take a look at this chart here, we can see that corn was revised lower by about 2 million metric tons for Argentina. Soybeans was revised lower by about 3.9 million metric tons there. Brazil, though, we did get a slight upgrade to both the corn and soybean crops there. Corn was moved up by about 4 million metric tons, and soybeans was moved up by about just over 1 million metric tons. So on net, we did get a slight reduction in corn and a slight revision higher for soybeans. So I think the market kind of did take this in stride. I don't know if it really affected the market one way or the other, but it really just shows the effect that the weather in South America is having on the markets in general.
Yeah, absolutely, Brock. Here, if we take a look at kind of expectations for over the weekend out of South America, you can see that this area that we have circled in red should be getting some good precipitation. This map showing Sunday into Monday, but this map kind of also does a good job of showing just what we've been seeing in general in northern Brazil. Here in northern Brazil, in the Mato Grosso region, you can see these pockets of red, exceptionally heavy rain. That's been kind of the trend here for the last several weeks. Northern Brazil getting a lot of rain. Southern Brazil and northern Argentina really have been moving to more of a drying trend. So today's information out from Informa was just kind of confirmation that Brazil is going to need to pick up the slack in South America in terms of production right now. And certainly their projection for 84 million metric tons for soybeans is one of the higher private analysts out there. So certainly Informa still looking for a big crop coming out of Brazil.
You know, we are starting to see some of this dryness and weather concerns start to take effect. Private analysts are starting to back off on some of their production estimates right now. But I really think the funds are starting to pick up and take notice to what's going on with South American precipitation right now. We've seen a lot of funds enter the market recently and really start pushing their weight around in there.
Yeah, certainly. We did just get the commitment of traders reports today, and basically that shows the composition of the market, how the managed money traders have positioned themselves. And as you can see here from this chart, the left axis is contracts net long. The bottom axis here is over time. And as you can see, coming off the highs from the summer, the funds certainly did liquidate quite a bit of those long positions. But it seems like we're finding a little bit of a bottom here. And certainly with the conditions, the changing conditions down in South America, it seems like fund traders are starting to get back in on the long side of this market. We did see soybean net long position pick up over the last week, reflected in today's commitment of traders report, and a very similar story with corn, but actually to a little bit more of a degree here. You can see just in the last several weeks for corn, we've added about 50,000 contracts to the managed money net long position. So certainly fund traders, the managed money traders, are looking at the South American situation and looking at the change to a more dry precipitation outlook here over the next several weeks and saying maybe it's time to get a little bit long here. Brock, with all this said, considering the outlook in South America, considering where the funds are right now, kind of put yourself in a producer's shoes. What's your take right now? Is it time to take some of these profits or price at some of these inflated levels, or do you think there's still some gas in the tank here?
You know, I think it's kind of a tale of two different stories there. I think for corn, you definitely have to look at pricing some of your unpriced bushels right now. Right. We're looking kind of top heavy right now, and I think today, with us moving to a highest level we've seen in quite a while and then backing off pretty sharply from it, that's kind of confirmation that maybe this is kind of the top end of where we're going to achieve in the near term right now. Right. So if you do have some unpriced bushels, you might look at pricing some of those. There's not a whole lot fundamentally holding up the corn market right now. Ethanol is lagging pretty far behind to meet USDA projections. Exports are running pretty slow right now. Right. So I don't think there's a whole lot fundamentally holding up corn. The only thing really holding up corn right now is the soybean, what's going on there in soybean market. That's really skyrocketing quite a bit higher over the last few sessions in particular. Yeah. And, fundamentally, soybeans really have pretty strong footing underneath it. So I would I would say leave the top end open on soybeans. Maybe look at pricing some of your corn bushels right now.
Yeah, certainly. You know, if we look at that DEES 13 contract in today's action, it looked like we were going to make a move higher, maybe test the $6 a bushel level for DEES 13. So in today's action, so if you're kind of looking at $6 as maybe being a price point for DEES 13 bushels, that opportunity might present itself early next week if we kind of take off on the same footing that we had this week. But we'll have to wait and see here. You know, I think in general, Brock, that's kind of what we saw today on a Friday in the grain market. We certainly appreciate you guys for joining us here on GrainTV. Everybody have a great Super Bowl weekend out there. Have a good time. Have a good, safe time on Sunday, and we'll see you here on Monday.